Okay, for now, I'm gonna write off Dotson as absent. All right. We're gonna start on chapter 2 today. I also want you guys to figure out who's gonna be in your group. We'll do 4 groups. Actually, you're 16 people. Let's do 4 groups. That means when there's Jeopardy, everybody's gonna play. Uh, I'm gonna be up to date with the videos this afternoon, but that's for the Excel skills and time value of the money. I'm planning to spend basically 2 lectures on chapter 2 today and next Monday. Then I'll give you guys your homework assignment. Then after that, we'll do a Jeopardy on it. But I typically leave a weekend before the Jeopardy. So today and Monday, I want to do chapter 2. Next Wednesday, I'll start chapter 3. The following Monday, we'll play Jeopardy on chapter 2. All right. This chapter is understanding financial statements. You guys have all taken some form of accounting classes, right? What financial statements are we talking about? Could you guys give me a financial statement that you heard about, seen? These are not difficult questions. Income statement. What does an income statement do? It basically looks at your revenues and expenses and presents them in a certain way. Any other financial statement you heard about? It may have been a while since you took accounting, but come on. Huh? Statement of owner's equity. That's technically part of another statement, but what does statement of owner's equity do? Yeah, it shows basically whatever the residual value of the firm. Okay. What's another financial statement? Balance sheet. What does it do? Huh? Oh, it doesn't balance anything. It is balanced by construction. But what sort of information does it provide? No, that's an income statement. Well, a balance sheet basically lists what you own and what you owe. Okay. And the difference between two is called the owner's equity or shareholder's equity. Uh, the way it's set up, balance sheet identity. This is the mother of all accounting identities. Total assets. We're going to abbreviate that to TA plus total liabilities, which is a fancy name for things you owe or your obligations. Or, I'm sorry, they are equal to total liabilities plus total equity. We're going to use synonymous terms for total equity. You may hear owner's equity, shareholder's equity, equity. Sometimes that's also known as the book value of the firm. Uh, Before we go into details, let's think about what's even the raison d'etre for financial statements or reason for them being. It's a fancy French term, okay? Uh, they're there to provide information, okay? You tell stories with them. And just like any story you tell, the meaning of the story is a little bit different depending upon who's listening to it. So there are multiple listeners, the so-called stakeholders in the firm. Obviously, shareholders are interested in stories about the firm. After all, they own shares in the company. And if you own a share of NVIDIA, you want to look at their financial statements. But there are also other people who lend money to this firm. Okay, they're interested. They're not necessarily interested what's the price of stock is going to be, but they're interested in whether or not the firm is going to be able to pay uh, the loan back. Depending upon what sort of loan, you may be interested in short-term stuff. If you provided, you're a supplier to the firm and you provide a trade credit, which means you sell them the stuff, but they say we'll pay you in 30 days or 90 days. That's an example of a trade credit. It's not technically a loan, but functionally it is. But for people who lent them money for 30 years, they're interested in longer term stuff. Even regulators are interested in these financial statements. I mean, looking at the financial statements, are there any signs that there are shenanigans? Are they providing clear information to their shareholders? Mm, Tax authorities are interested. They look at your financial statements. They look at how much taxes you paid. They kind of uh, need to jive using an old term. But stories, just like stories, there's a structure to a story. Okay, so let's start with balance sheet. In the old days, you actually kept the balance sheet on ledgers. It basically you had on the left side you had your assets listed. On the right hand side you had your liabilities. Then right after them, still on the right hand side, components of shareholders' equity. Uh, but those assets are not listed in random order. There's a structure to it. Anybody knows in what order they're listed? Hmm? What did you say? It's okay. It is not. You can say something that may even sound silly to yourself, but even that is a learning opportunity. It's all right. Assets on the left-hand side of balance sheet. By the way, balance sheets are the items in the balance sheet are listed as of a particular date. Okay. Balance sheet as of December 31st, 2023, if it's an annual statement. If it's quarterly, last quarterly would have been June 30th, 2024, just as of that date. Assets, first and foremost, are listed at their book value, which means historical cost of acquisition less any accumulated depreciation. let's say you have an asset in your balance sheet, you know, consider myself a firm. I own two Subarus, one of them 2023, the other is 2020. My son is driving the 2020. And if I were able to sell that, I could probably get 2021, something like that. That would be the so-called market value of the asset. Okay, the value that you could get in the market for it. But the book value is almost always different from the market value, especially for assets that are a little bit more, uh, let's say, long-lived. But I bought that car, let me see, at 25,000. And when I bought it, it had only 5,000 miles on it. It has now 40,000 miles on it, more than likely. Uh, and there is accumulated depreciation on it. If I was a firm, I would have listed that probably as a 7-year asset, more than likely 20%, 30, no, it's been 4 years. Probably half of it is already depreciated using something like Maker's depreciation, which we're going to talk about.